The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Setting in for Larry today is Rod Serling of the Twilight Zone. May we live in a different era. Ladies and gentlemen, we're going to start out the program today with the U.S. dollar index. It has made a 61% retracement of the last major low that we had several months ago. We're going to walk through the different ones that we've seen. I posted it into the room. Let's post it again. Let's see if we can get it in here the second time. I posted it once. Guess they didn't get it. We can do it again. This is doable. All we have to do is to pull it up. It starts with a U, ends in a P. And we will pull up that dollar index chart, and you'll see that it's setting right at the old 61% retracement level. And looks very interesting here. Hold on one second, folks. I can't work under pressure too well, so give me a break here. Twice now. Anyway, it's made that 61% retracement, but what I would like to do is to walk through to show you how it was done, because last night we had some wild things happening in the old commodity markets and foreign exchange markets. The first one I want to bring up to you is the one for the biggest one of them all, which is the euro versus the U.S. dollar. The pip spreads were 5-6 pips apart, sometimes 9 pips. Last night, in the middle of the night, this all started about 2 a.m. New York time, right at the London Open, and the market. We were looking for the market to get to 1449. And 111, 1449, we got to 111, 1446. We've since backed off, just only 100 pips from that level, but that's a perfect ABCD 3-drive pattern. We're up 10 full handles from the bottom that we made back in March. So this has been we've had, during the whole episode here of the bearishness. We still have a target of 99 on the euro, but if we get much above 115, this thing could really go, and the dollar could literally go and collapse. So the next one we want to take a look at is the Australian dollar, and we'll take a look at it. You'll see that it also made a beautiful butterfly pattern up at the top today, and has since also sold off a good 100 pips. And it is, but this doesn't mean anything, because these markets can move so fast that you have to wait probably till tomorrow, the next day, to see if this is in fact, going to be a really good place, to look at this. Now, we've already talked about the British pound. We did that yesterday, talking about that area where we were. We were up 8 days in a row, as I recall. And let's see if we can put this in here. And this is a little different than the one we had, but you'll see that we've completed this pattern, and we have a potential now for a shooting star pattern in this British pound. Well, we were looking to sell it right where it's trading right now at 157.55, using about a 100 pip stop. We missed that by about 50 pips. It got to 158.03. So that's another one that we're looking at. All of these are fitting together so nicely, and that's why it looks, why this dollar index is so important, because of where we are. Now, if we go over to Japan, and we'll take a look at that one, you'll see also the same thing has occurred, that we have the same pattern forming. Now, these will be a little bit different on the one side here, because of the fact that we've got oh dear, give me a second. There we go. Yeah, pull this down a little bit. Okay. And then you'll be able to see the Japanese yen how it looks versus the U.S. dollar, it also is forming a really nice Gartley pattern. So all the things are lining up in incredibly well. I mean, it's just, we have to do one more, and that's Canada. I wanted to do the big. They're just lined up like ducks on the pond, as they say in the old Terre Haute, Indiana duck blind. Okay, now we're going to be looking here. You'll see this Canadian dollar here, and then what I'm going to do with the Canadian dollar, I'm going to microscopically look at it, because we'll go down to a smaller time frame, which is a 240-minute chart, and you're going to see a really nice three-drive pattern forming in the Canadian dollar. So all of these are telling us that the dollar is ready for a bounce. I know everybody loved it in March, and they hate it now, and that's what they're supposed to be doing. But this is what the old clock on the wall is telling us, that this is what we want to be watching here. Is watch these currencies. Now, this could all change by the end of the day. If they all reverse and go back the other way, then, what I'm talking about here means absolutely nothing. But it started the right way. All the patterns completed right on schedule, and it makes people a little bit scary. And so we'll have to wait and see what's really going on. Our bond market is still in a great deal of trouble. The stock market is still going higher. Nobody is afraid to buy stocks, and why should they? The VIX index stopped exactly right around that 1295 level where it's trading right now. It's still hugging that line, but we've got the Dow Jones up about 170. We got the S&P up about 16. We got the Nasdaq up over 50. I mean, it's pretty hard to be bearish when you see things like that, and it really gets the market, moving in one direction. And once that snowball starts, you and I know that it'll keep going for quite some time. But the currency markets is where the action was happening last night, and so that's something that we want to look at. Now, we've got another one that we've been really pleased with, and that is the gold market. This gold. Let's start out with the XAU, because that really shows what's happening here with some of these gold stocks and silver stocks. But there is a slight problem today with that. I don't know if it's going to happen yet or not. Star pattern in the gold and silver stocks, and that's the one that we've seen here. Sorry for the problem. Testing 1 2 3 to see if I'm in the room. Can anybody hear me there? Someone in the room, please let me know. Doesn't look like it's working. Okay, we'll just not worry about it, and we'll see what's going on here. I'll just keep talking, and I do my best talking when no one's listening anyway, so we'll just keep on working. We're going to try to have Rich Anderson on here at the break, and we'll see what's going on. The market's making new highs now in the stock market. NASDAQ up over 50 points. Dow probably be up, look like, over 200 points today pretty soon. And we have a pretty good move going on. Boy, oh boy. What do you mean I'm not logged into the den? I certainly am. I certainly am logged into the den. What are you talking about? Just... Okay, go here. Tiger.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks, and here in sunny Philadelphia, due to the overwhelming communication based on this terrible tragedy that we had with Amtrak, with all the reporters and everything that's here. I don't know if that's overloading anything, but several of the people have had trouble with it during this last few days. Anyway, we will hopefully we'll see that we'll be able to look at our price of gold and silver breaking out to the upside, which we've been expecting for quite some time. Now, over the last 2 days, we have some important things to talk about, and that is that the open interest in gold has increased by 1.5% each day, and the open interest in silver has increased 1.5% each day. That's not a lot, but that's the first time we've had this. This is going to be something that is really interesting, because what's happening is that we have new buyers coming into the market. Now, whether they're going to be correct or not, we'll have to wait and see. But this is a valid breakout. This thing broke out 2 days. That doesn't mean it's going to go straight up, but we certainly want to watch for pullbacks, to add to the position. We've been talking about buying silver on this show for several weeks now, especially buying the silver rounds, the 1 ounce silver coins that are produced by the government. It says United States Treasury, 1 pure ounce of gold, silver, and I recommend those highly. With silver trading at around $17.40, you can buy those usually around $19. Sometimes they'll charge you $20, but I think that's even a fair price at that price. Nowhere can you buy a 1 ounce bullion bar with the stamp of the United States of America on it, so I think that's a good thing to have. Our Treasury bond market is still under a great deal of pressure. We've had a little bit of a bounce today. Again, it stopped basically at a 38% retracement of the high we made yesterday. So we're still in a strong trending market to the downside. So we'll question of when the Federal Reserve is going to decide, yes, well, I think they're going to go higher. Well, they are going higher. The German Bund has collapsed just like our Treasury market has done. And so it's been, rates are getting ready to move higher. The stocks don't pay attention to that. So you have to say that it looks like they want to go higher. We're approaching taking out that high of April 27th. And if we do that, it's very, very difficult, to be bearish stocks. We've got the Dow Jones up over 170 points today, which is quite a bit. So, it's a big move. We've got the S&P up 17. We've got the NASDAQ up 52. And that takes a lot of buying. But remember, these stock markets are really a whole lot smaller than the markets that we have for the currencies are huge. I mean, they're 1,000 times bigger than the stock market, but the currency markets are the largest, of course, and then followed by Treasury notes and then Treasury bonds. And these have been getting hit really bad. This tells us that interest rates are higher already. They're not going higher. They're higher already. The Fed has just not done anything yet. No one has the courage to step in and decide that that's what they're going to do. But it looks like we're ready for a potential valid breakout in these things. Now, we're going to have Rich Anderson on at the break, but I wanted to mention one other thing. We're going to cover the grains with Rich because he was the one that said, we're really that we're really in the so someone asked a question. It sounds like I'm in a room talking like someone is taking a nap. Well, folks, you flat got that right. My little 2-year-old grandson is right here next to me, and I'm not going to yell and scream and wake him up because he's got a little bit of a cold, and he's sleeping very soundly with his little gold coin in his hand. So we'll just let him sleep there and not worry about it. But the VIX index is still pulled back below the 13 level now, and it could easily collapse again. But we've got some really, really wild things happening with the new moon and Mercury going retrograde over the weekend, coming in on Monday. So we're going to have a really interesting show with Norm Winsky at the half hour on Monday. We'll have Rich Anderson on at the break to discuss the grains because we've had one heck of a move in wheat that we talked about just yesterday, and also on Monday we talked about it. So wheat and corn have really started to move finally off those long ABCD patterns that we have, and when Rich comes on at the break, we'll cover that. We've got the Dow up 176, NASDAQ up 52.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, I have a tiny bit of bad news. Due to this volatility that we're having in everything, our friend Rich Anderson has not been able to break away from his normal duties as a hedge fund manager and all the other trading that he does. So we're going to just cover some of the things that we were going to cover with Rich. So we'll see what's looking at. First, we're going to start out with the thing that he talked about last time he was on the show last Thursday, and that was looking to buy the wheat down in the area of $4.70 a bushel. It has now rallied 36 cents. It's rallied well over 30 cents just in 2 days. Which is a phenomenal move for wheat. That's a 30-cent move, which is $1,500, and we certainly want to thank Rich for telling us that this was a really good spot to be looking at the the long side of the wheat market, which is certainly paid off nicely. The first objective in this was 15 cents, and we've already doubled that. So what you would do now is to raise your stop up about halfway to about the 486 level and let it ride to see how high it's really going to go, because you don't really know for sure. Now, we've been talking about the corn market for quite some time. One of the things that we looked at was the cash corn, which was very important to watch that, because we were trading exactly at the 61% retracement a week ago last Thursday. The market has since held that level, and we've rallied almost 13 cents in corn, which is quite a bit for the corn market because it moves a heck of a lot slower than wheat. So the spot corn has done very well, but also we were looking at the new crop corn, which is the one that had the really long ABCD pattern that was here, and we'll put it up and let you take a look at it here, because it's something that we've talked about, and we want to remember that these patterns, even though they fail sometimes, when they work very nice. New crop corn already, which is really good. Now, crop corn. If we take a look at July, this is what we were trying to impress upon you, listening to Rich, coming together at the same time. Wheat, corn, beans, and the new crop corn, old crop corn, all of it was coming together all at the right time, and that's an ideal situation. And also you have the seasonal, where you want to be buying into the planting season and selling into the harvest. So this is, maybe it's the start of it, maybe direction. There's a long way between now and harvesting, which will start in late September, early October. So until that really happens, there's not much is going to be any different from anything else. Oh, we finally got Rich online. Rich, you got a few minutes?
Me?
Yeah. How are you, buddy?
Good.
How do you like this volatility?
Oh, it's crazy, but you know, it's all what the market's focused on. Everybody was bearish the wheat, and you know they couldn't break it anymore, and now it's flying because the shorts are happening to get out. Now they're talking about El Nino in Australia, which I mean it's summer's crop. We're months away from that, but that's the thing they've got going. The corn, you know, the critical period will be coming up in end of June, July, and you know, they keep trying to pound the corn. None of the news is good. But when a market can't go down, it's going to shake the trees and get the shorts out. Okay.
We've had some pretty good movement in the silver and gold, too. Do you care to comment about that? We've had some increases in open interest, which is good.
Well, it's just, you know, basically with the economic data we've had, you know, if you look at the macro, the economic data we've had, it's disappointed people. Now they think it will be next year before we raise interest rates. We're just printing too much money, and this money eventually has to go someplace, and gold and silver are value at these levels. I mean, you know, every time they break them, they're just value.
Mm-hmm. I agree with, I've been telling the folks to buy the 1 ounce silver rounds from the U.S. government, because they're not only beautiful numismatic coins, but they're I believe that this Treasury bond market is signaling something really bad is coming up, Rich. I don't know what it is, but when you see bonds, you know, break $11,000 in a month, that's an outlier event. We don't see a market that's as quiet as that one, you know, get hit that much. And the Fed will not even realize that interest rates are already higher. Not going higher, but they already are higher.
What amazes me is that, you know, that this has happened at a time when now the markets think that the Fed isn't going to do anything. And so eventually the Fed may not do anything, but the bond vigilantes, the market, will do it themselves, you know, even if the Fed doesn't want to. And that's kind of what's happening in the futures market these days.
On these folks here, when they're looking at their passbooks are going just absolutely nowhere, and automobiles and here after the crop report. You want to talk to us a little bit about what the report said? And I know it was most bearish for beans from what I understand, but why don't you give us your take on it?
Well, the trade had expected that the corn carryout for this year would be over 2 billion bushels. That was their expectation. And so they were, you know, everybody, or a large portion of people, are short. And then the USDA came out and said, well, we're just leaving the carryout basically unchanged. They just punt it until June. And that caused a short covering rally. Now, we think that you'll see a corn-bean ratio of 2.3. So if corn is at $3.50, 2.3 times $3.50 is what soybeans would be. So 2.3 times 3.5 equals 805. So you can see the downside potential for the soybeans.
Oh, sure, because they're trading at around 950, so they think that they could break $1.50 a barrel just on that ratio.
Yeah, a bushel, but
bushel. Yes, sorry.
Yeah, but the deal is, we're coming into the growing season right now, so you got to be very careful about being on the short side of the market when all of a sudden, right now, if you look at the weather maps, there's rain everywhere. We've gotten the stuff planted early, but once it stops raining and June turns a little warmer and July turns a little warmer, it's the weather in July that determines the corn crop. I mean, the USDA said that last week when they gave their report. So it's a little tough to be pressing the market, but that's where the beans can be in the fall. So you look for those pops that are short-term, 3 to 5 days, because there's a weather change, forecast change, and you try and get your trade location as close to the highs on those rallies as possible. Looking at extensions and the kinds of stuff that you teach.
Well, when you have great volatility like this is ideal for what you try to find, because, you're looking for places where you don't have to risk very much, and the patterns, kind of help you format, where you really are. I wanted to bring us back to one of our listeners have asked a question about what's your feeling on how high gold could go from here, Rich? Do you have a target or anything that you're looking at?
No, I don't really have any targets right now. I mean, it's broken out of some patterns that suggest it can go quite a lot higher. But I think you have to be looking at quarterly and yearly charts to get. I mean, I think it could be retest the previous highs. Not unlike what the stock market's done. Stock market sold off sharply, and now we're knocking on the door of highs and making new highs. That's the kind of thing that you can see in gold.
Well, remember back in the 1980s when we used to talk about money supply, and money supply is up 400% in 5 years. If we were still talking about money supply, M1 and M2, gold would be at $3,500.
Right. And, adjusted for inflation, it's minimum is $2,850. I mean, yeah.
Well, it's no one ever thought it would get above 1,000, and look where it is now. And this has just been a 27% pullback from that high we had at $1,932 per ounce. So it stopped right near the 6.8% retracement around that 1140 level. So we're now almost $80 higher than that now, and any move above 1,300, I think, is going to bring people that have been on the sidelines, waiting to see what could happen, much like they did. They didn't get interested in it until it got above 85. So that's another thing that I think could fall into play, and that would get silver probably up to that $21 to $22 per ounce level, which is still only not even halfway back of the big move down from $48 an ounce.
Well, the gold, once it gets going, I mean, it isn't just this country that's printing money. Look at how China is all of a sudden relaxing their, stimulating their economy. And, there's just so much money out there in so many countries, and where do you put it?
In the stock market, Rich, in the stock market.
Well, and the other thing, the negative always about gold was, you don't get any return on gold. There's no interest, there's no dividends, but now the dividends are inconsequential and the interest is negative. In 40% of the developed world, it's a negative interest rate. So then gold becomes a relatively attractive alternative.
Wow. Well, we live in interesting times, don't we, my friend?
Oh, it's unbelievable.
Particular commodity that you're looking at that you might want to share some thoughts on? Cattle, could be anything that looks interesting to you right now.
Well, the Urals had quite a rebound, and the crude oil had quite a rebound. I'm thinking the rally in the crude's probably run its course temporarily, and I'm kind of looking for that to go back in that 57, 58 level, expecting that it needs to hold there. If it doesn't hold there, we'll be looking at the low 50s. And, if I was to pick one market that I've been selling on the rallies, it's the crude. I was selling that above 62 and looking for it to go back down.
A lot of overhead supply at that $61 a barrel, and today we rallied up near it, and we quickly broke it's almost $2 a barrel. So that's telling you that there is a great deal of supply coming in there at that level. Well, listen, Rich, we're going to let you go now because I know you're really busy, but thanks for coming in, and we'll have you on in a couple of weeks, okay?
Yes. Sorry about the delay. That was my fault.
Well, no, it's communications everywhere, my friend. It's not just on your side. So we'll talk to you later.
Thanks. Bye-bye.
Thanks a lot. Okay, that was Rich folks that we rely on very heavily on grains and especially livestock, because he is not only a wheat farmer, he also is a cattle rancher. So he knows these markets inside and out, and he's an active trader along as being a very active hedger also, and he has his own hedge fund. So anyway, we're going to get back to the currencies here to wrap up the show. I think that we're at such a critical level here with this U.S. dollar that we posted to start off the show. That's a major ABCD pattern here in the dollar index. It transfers over to the euro, which we've already talked about. The euro has broken 100 pips off the high, and that's a big move from going up 100 to down 100, so that's a great deal of volatility. That would be equivalent to the Dow going up 200 and down 200 in one day. You would certainly pay attention to that, so you want to be able to pay attention to this same thing that we have going on, with the market. Of course, the NASDAQ is the big leader here. We push the limits of these things. We're 50 and goes straight up and straight down in different time frames, so we want to watch that. We know that we have a really high influencing date coming in here on Monday, which is that Mercury retrograde with the new moon. We know how the new moon affects the markets because they have certain strong trend dates on those dates. And with Mercury retrograde, as Norm Winsky pointed out, we have a really strong indication that there should be a change of trend coming in. And that could be any time between Friday and Monday. Because there's an orb there of 1 day, day and a half at the most, so it's going to be real active on Monday, to say the least. We've seen this many times where the market rallies up 1 day, and then the very next day we're heading south. We've done this 5 or 6 times over the past few months, and we're still in the same trading range where we've been, but we're getting really close to breaking out of that trading range, as Basil Chapman pointed out. And take a look at this VIX chart to see where we are today, because we were down below 13 just a little while ago, and I'm sure we're still there. We're 1283. We actually broke that downtrend line that we were looking at that had held for quite a while. We've had higher bottoms, and we're still at higher bottoms, but they're breaking that little marginal trend line that I drew in, and whether that's going to be a major point, I don't know, but this market certainly looks like it has no prisoners on the upside. Okay, we'll be right back after this break with the Dow up 180 and the NASDAQ up 55.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Up next, the Diagnostics Trading Hour with Daryl Martin. Here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I wanted to just reiterate the importance of this dollar index where we were up there at that, well, it's actually the euro at that 114.50 area. We've broken 100 pips. We've since rallied back 38% so far on the day, but unless we close really strongly, this could be a major turn in the U.S. dollar. No one loved it, when it was at 75, when King Dollar. Back in March, everybody wanted it. Nobody wants it now. So, this is the first major ABCD correction we've had in this index since the whole thing started 2 years ago. This is the first really major one. So this is what Gartley said, is look for those first major ABCDs, and this one's coming in exactly at the exact time that we have to go. I'm going to have to cut the show short today for a few minutes. I have something that I have to do family-wise that cannot be helped, and I'd forgotten about it. So I want to end the day to tell everyone to do something nice for someone else. Live every day in an attitude of gratitude, and may God bless, and I hope to see everybody on Monday when we have our good friend Norm Winsky as our guest. So thank you very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.